The results are in, and it doesn't look so good for the US economy. Inflation was on the rise, but even so, markets rallied, and it's left many of us probably scratching our head. According to JP Morgan, it looks like inflation will be gone as early as next year, but others are not so convinced. Today, we break down some of the key underlying principles of the market right now. There are some worrying charts. There are also some good charts. So we need to go through and analyze what tends to happen over the next couple of weeks. We have a lot at stake this week with trillions of dollars of options expiration and some interesting dark pool liquidity that just entered into the market over the last 24 hours. So let's talk about S&P 500 in the middle of a range, when we'll see a breakout, and the biggest stock in the world. It continues to falter and it's moving towards a new lower low. What happens if that does occur? Join us as we cover stocks, commodities, and cryptos together. Well, welcome back, everybody, to the Daily Show where we discuss macro, lead indicators, and the hottest charts. If you like anything to do with markets, remember to subscribe and smash that like button. Let's begin by discussing the big tech stocks. They were doing pretty well, except for the notable ones here, which was Netflix and AAPL. Both were down on the session, and we will need to watch the canaries such as AMD and AAPL for potential market weakness over especially the next week. But let's talk about inflation reports. There was really two things I pulled out of it. Yes, we all knew energy would rise, 0.6% on the consumer price inflation jump, but have a look at this stat. Shelter index has risen now for 40 consecutive months. That is an incredible number, and it just shows you that we could be in stagflation and not even know it. And that could also open up potentially for commodities and gold to actually do better than it usually does. And I'll show you some stats that I shared over on our Twitter or X account, and you'll be surprised at how bad commodities have actually been for the last 50 years. So shelter's up. Of course, the Fed will be looking at this. In less than 24 hours, we now have the American consumer retail sales, and that will become a very important point. Did we see a rally across all markets? Well, the bullish percent index indicator still went down, even though we saw a sell into rally. Remember, the first move is often the false move. That's exactly how this particular report played out. You would think the market had to sell. In fact, JP Morgan's, I think it was like day playbook, said that if we get a 3.7% number, we were going to sell 2 to 2.5% off. Well, that didn't quite happen, did it? But this is still in line. We're looking for a turnaround here in the bullish percent index to show us we have a real rally. We just don't seem to have it yet. Here's another interesting chart, and I want to bring it back because Tesla, of course, is on everyone's mind right now. Morgan Stanley put a price increase into it. However, large cap long only funds in general have been holding super underweight Tesla. Never forget that Tesla is traded by us. Retail traders make up a huge component of the Tesla ownership. AAPL also, even though this is older data here, take a look. It's been underweight. What's been getting suffering the most at the moment? Of course, it is this stock. My favorite out there is in almost every fund. I do think it's a great moat company, which is Microsoft. And again, if you want to view this, you can view it over on our Twitter or X account. Links in the description down below. Here's a great chart as well. Maybe save this one out. It is pretty amazing. The report, 200 years of data. It's not often we get so much data report back, but I love it. And we see here that stocks have outperformed bonds, that have outperformed cash, that have outperformed obviously commodities over time. But is it time for commodities to do better? They've been doing very poorly since really the 70s in terms of overall gain. And it might be that we are in stagflation and we don't know it yet. Now, if we are in stagflation, or some of you down in the comments below will say, yeah, we're already there, man. What are you talking about? Then we should really see outperformance of commodities and gold over the next coming years. Will that be the way? Higher for longer is certainly what the yield curve is telling us about this inflation report. And I still think there could be another rate hike on the horizon from the Fed. Jerome will be looking closely at everything. Let's talk about September. Do we expect weakness this week? Statistically, no. We don't usually expect it till the Friday. So again, we're kind of in line with that. And why the Friday? Because we've got trillions of dollars of options expiration. We'll go through quad witching and the event in the next video, but basically it's a 34.16 bullish rise usually, and then a 17.33 bear sell that tends to happen afterwards. That's at least the stats that we're playing with. You can see here as well that Friday does tend to have some negative correlation with it, albeit very small. But remember, of the last 11, 10 of them have been down. And that's just a data stat, but if you see a technical analysis set up that goes into that data, Could it be stronger? Of course it could. That's what we're all about, trying to analyze markets a little bit more analytically here. Now, let's talk dodgy numbers, because the sequence of the last 7 consecutive NFP reports, this is the jobs numbers coming out from the US, have been revised downwards. We've only seen that in 2008, 1985, and 2023. Now, some people actually argued that this is very, very strange, and that it could actually mean that the Fed will hold rates, and that we're already seeing actually unemployment start to rise, therefore the bond market being possibly correct about a minor or some kind of recession coming. But this data, I mean, what is this? This non-farm payrolls needs to be fixed, you know? I just feel like it needs to be fixed in terms of the way that we see things. We do know that September tends to usually have this type of little middle kind of rally. We're about in here at the moment. And then, of course, the sell-off, if it's going to occur, tends at the end of the month. So no wonder we're staying in the middling zone. But what about large trades? Well, the SPY, or the S&P 500, managed to get itself back up. And we'll talk about the way it's structured in after the result, by the way. This is very interesting. But it managed to get back up to where we've seen large transactions before. Could there be a seller in the next 24 hours? Of course, I think the day traders and scalpers will be on the lookout there. We've got some other stocks that had some interesting trades. PLTR, one that you guys all love in the community. It's in a holding pattern. Now, is this an accumulation or a distribution? Well, we'll tell when it breaks out either way. But it could be a buy or a huge sell, but PLTR getting a large one. You can see last time we saw such a large read, we end up getting a sell-off. In this case, we have a middling kind of ground position. Let's move over now to the Qs. Now, the Qs saw a large trade as well, even though they rallied up, and there's been a lot of large trades through here. Huge amounts of transactions. Again, I'm not sure if they're accumulation or distributions just yet, but the intraday trades have been really good on some of the indices. It's just the overall swing that we're not really seeing just yet. Amazon also getting a large trade on it. Could be a sell here after a nice rally up, and probably a little, it's more of a, I think, a run into kind of seasonality here for the stock. But yeah, large trade, could be a little bit of trimming going on there. Some other ones were treasury bulls. Now, all of a sudden, we get this monster trade. This is the second biggest for over the last 2 years. And effectively, this is a 3x bull TLT fund. Now, they position huge. Remember, positional traders such as large funds, they don't really have stop losses. So the market could still go down lower, but interesting that Treasuries just found a super buyer, it looks like, in the markets. Let's move over now to the wonderful world of options, and there was quite a lot of transactions going on. You'll see that we were actually above average volume down here. And in terms of calls, only 47% calls, 53% puts. I wonder why we went up during the day, guys. Yes, unfortunately, everyone would have loaded the puts for especially the day on the S&P 500. And the reason is quite simple. How can it go up with such a crappy result? Well, unfortunately, that's market manipulation for you, isn't it? I mean, we all know that that's the way it is, but there was actually a tell that this was going to happen, and it all had to do with the initial move, which was down, very quickly wicked straight back up, and then broke through a key resistance. Once that happened, it wasn't going to sell for the rest of the session. Even all the sells were going to be met by bull demand. It's exactly what happened. And, you know, I did it in our private community. If you ever do join, free 7-day trial down below, you can go back and watch the video, and we talked about it. And I said that was probably the best one for the day because, unfortunately, it does this. It's sneaky and it's nasty. Let's move over to the Zoom. The Zoom is getting still some transactions. I don't know what's going on here. 20 times volume transaction now. And again, there's some of the normal ones in. Oracle's getting a lot of interest because, of course, it got absolutely destroyed. I always say that when you see a stock get hit that big, although it might have a bounce, it's often a dead cat bounce. So that could be a false rally, I think, there. And another one that's interesting is Apple ended up having a 1.69 times daily average volume increase. Now, that's a lot. That's a huge amount. Netflix also on the chart for the first time in a while. So some stocks to be watching, certainly in the markets over the next coming days. Speaking of charts, let's have a look here at what probably everyone was thinking. Initially, we saw a huge spike up in the 10-year, the 2-year. They all approached. You'll see I actually got a little alert. We couldn't hold it. No daily close at higher points, unfortunately, for the 10-year. And the 2-year was the same. Now, because we're not in the fear of the unknown, because I think what the market's doing here is it's saying, well, you know, maybe the economy's a little bit sick, guys. And you need to lay off putting any more interest rate hikes on it. We're maybe stabilizing. You know, there's some unemployment issues. There's all sorts of things going on here. NFPs being revised down, etc. that we couldn't get above 5.1. Now, if we got a 5.1 plus, I actually think the market would have just mega sold and it would have been all over. But that's not what happens. And of course, that was one of our key metrics that we were looking for to show us that bears were really going to be in control. Treasuries did sell off 0.72% down. We saw a monster transaction. Obviously, volume has been elevated here. I could see investors liking this level. I'm still not convinced that we won't go to new lows. I haven't seen a turn yet. We need a higher level. I don't like to usually buy the dip because it could keep dipping. Instead, I like to buy the rip in this case, and we haven't seen the rip just yet. So I will be updating once we think that we've hit some good potential technical levels. The volatility of the volatility stayed relatively high considering we've seen the inflation report, and I think that's because everyone's now going to go to the sales report. Yay, more information for us to have a look at. The VIX itself, though, dropped 5.41%. It's like dead. This thing is, I don't think I've ever seen a VIX with the amount of information coming out stay so low for so long. And it's really interesting to see this metric. Possibly it is the end. I mean, we talked about this for a while. The VIX has been one of the best indicators of fear and greed. We're looking for a 12.12 here to mark a 2020 low still. So that could be a spike up for it. But yeah, interesting. I kind of want to see it hit 12.12 straight after OPEX, go into the next week of September, and then maybe see some spikes. Now let's take a look at this. So this is the S&P 500 percentage of stocks above the 20-day moving average. It didn't really go up. So there were a few stocks rallying, but not the predominant S&P. Let's have a look at it versus the 50. Horrible. Breadth is bad here, guys. And if you go over here to the 200, it keeps dropping. So this is the percentage of stocks above the 200-day moving average. This is not consistent, and we've said this a few times, with rallying markets. What we saw in January and Feb, nice. What we've seen post the March crash, I mean, can I say anything else? It's just AI, guys. And if you've been following AI, you'd know that NVIDIA, which is, of course, the biggest stock at the moment, I mean, everybody in NVIDIA is just selling all their positions. Why wouldn't they? They're just cashing in. They're like, yeah, sweet. I just got another cool 10, 20, 30, 40, 50 million from the insider sell. And no one's really buying. The insiders aren't buying that stock. They're just selling and ripping up. I think a lot is made out of that, though. So just be careful into reading into it too much. But interesting that we just do not have that super breadth that we usually expect with a nice, healthy market. Let's move over to home builders. Speaking of healthiness, home builders, we talked about it this week. And I want to bring it back up because we are selling off here on home builders. If we make a new low, let's set an alert together. Let's get an alert down here. So we can just go right click here in Trading View and just set an alert. So we'll have that one for the future. If we end up topping off here in home builders, that could also tell us, and it's probably a pretty good precursor, that markets are weakening. And of course, that with the Dow Jones Transportation Average is another sign that markets would be actually really sick underneath and that all that's holding it is AI. There's only a little bit period of time before that goes bad generally. S&P 500 versus central bank liquidity, nothing really to update. Slight dip in central bank liquidity. Magma, which is of course part of the Magnificent Seven, that's a long leg doji on the weekly, and the daily just basically stayed flat. So again, not too many moves there. What does look more positive though is the markets are prepping for some large liquidity action, I would say, out of China. This iron ore price is the gift that keeps on giving in terms of if you have been in some commodities space. Look, we've just seen iron ore do really well. We reported on it first 4 weeks ago, and we've been following it pretty closely. Vale, BHP, Rio, FMG, any of those types of iron ore stocks still doing well, and iron ore price going up. So copper's also stabilizing with this, and it's the market, no doubt, precursoring some type of back-end kind of support by China. And we're starting to see them kind of cave and move all the sorts of liquidity and do everything they can. We kind of estimate they will do that, and we'll talk about it soon. Dollar index was a little bit of a crapshoot, actually. We didn't see too much here. We had a low and a short, so we actually had two exceptionally good levels. And I said this to the private community while we were streaming the inflation report. I said, I'm going to lose both these positions. And what I mean by that is we're going to lose them at break even. Like, they were exceptionally good entries. I could see both bullish and bearish case scenarios, just like I could on the S&P, and we'll go through that soon. But realistically, yes, both were whipped out. And then, of course, we've seen a contract roll, and that's brought the dollar index down. It does look like the DXY is trying to top off here. We've mentioned that a few times. But yeah, it was a strange day, and I guess we're probably going towards that 20 moving average. then we might see like a rally to fill the gap at the futures contract, and then we'll report back on it. DXY, very strange after all of that. Gold still looks horrible on a chart. We got the tweezer sell. We sold off. We didn't see yields go to a new high. If we did, gold would have got destroyed. And at this point, it's kind of just like floating around. It doesn't tend to have a good run on it for the next 30 to 60 days generally, though after that, we'll get excited about it. Gold stock, a little bit different. I do like the level for gold stock. No closure above our damn yellow line here, 28.82. It's like the barrier that can't get through. But we've got doji, we've got a wick rejection, we've got another long leg doji. So clearly there's some indecision here. We're looking for decision-made purposes. Everyone keeps trying to sell oil. Oil managed to get its way up to almost 90 a barrel. I still think 90 to 92 a barrel is at least most people's targets here, and everyone's trying to short it. I think it's 65% shorted on the CFD contracts at this stage. So it's causing, more of this squeezy technique. Also notable, most people are trying to short the markets at the moment as well. That was up near about 68%, I believe, short coming into the open, which of course is why we ended up getting as well a positive reaction after the inflation numbers, at least in my opinion. Let's have a look here at Tesla. Nothing going on. Another rejection of the kind of rally. It was up 1.43%. We still have the shooting star. We still have this gap that's here. We still have a lot of trade that goes through this range. And of course, we've got a 20 moving average. Now, there's going to be a large amount of trade here that was a pretty, obviously, accumulation at this point. And then we might come down. Now, just be careful here, though, because, of course, we had a gap up. We're building what could be an island reversal. And if we get a gap down, there's probably going to be a short into something like this range, at least for day traders. Then we find out whether the buyers really mean they want their $400 price target. And because it's us, the retail traders, a lot of it will be looking at social arb and a few of those other things, along with this very bullish report, of course, coming from Morgan Stanley. Disney, no updates here, didn't make a new high, but we are watching it. AMD trend line, obviously the super trend line that we've talked about before, it held, so the canary has not sold off yet, up 2.28%. No turnaround on this stock just yet, so be careful here, but we're watching very closely how it reacts in comparison to other stocks. Another one is the biggest stock in the world. It's Apple. And after their announcement of iPhone 14 Plus, I'm going to call it, or Plus, because it really is just an incremental update, we didn't see too much strength. This is, of course, I think, a geopolitical concern for the market, and that's why they're underweighted as well. But at the same time, what if we make a new low? Set the alerts. Know when that happens. The biggest stock in the world, if it's canarying and saying, well, we're weakening off, again, not a strong sign for the underlying market. Another one you want to be looking at is RSP, which is, of course, equal weight S&P 500. Look at this. Horrible. It's horrible, guys. It's getting closer to those lows again. So, again, equal weighting, the breadth of this market just sucks. And I wish it was better because technically you'd feel a lot more bullish about things. It was improving. But now, look at it. It's down at a very pivotal area for it. Speaking of pivots, let's talk about the indices. And first up, we'll start with China. It looks like they've got like a wall here of policy at this stage. Again, at this point, it looks like there are some bulls here. Technically, of course, it is a bit of a demand zone. We've got the German market. It's sold, closed low, and then it's rallying up. Kind of confusing. We've talked about this being a potential large distribution. So, of course, selling. And if you want to be bullish on the German market, you just really need to set alerts above here, because once that happens, there's almost all the bears would be wiped out at that point. So bears still sitting on that market. Australian market looks a lot better. The Australian market's trying to rally. I think a lot of this has to do with commodities prices, in particular iron ore. Iron ore, big part of the Australian market, and of course metals and mining and energy and all that type of stuff. So yeah, I could see why people would have bought on the previous session. Actually a great entry there, very replicatable. It's part of our day trading masterclass. If you're interested, links in the description down below. Very replicatable concepts through a few things over the last 24 hours. US 2000, now this chart, look at that, looks horrid, yeah? It's down at a very interesting level. Have we made a new low? Well, the daily actually got to a new close low. That's not positive generally for markets. Of course, I would set alerts above here. I would also set alerts below the wicks. And where that thing closes, we could then move to the most traded zone, which is 1750. Now, if there's small caps, which are weak at the moment, do weaken off, a lot of people are going to say this is a head and shoulders. A lot of people are going to really start hammering that short, and it's going into that seasonal period of year. It hasn't happened yet, but we want to be very active at watching the US 2000 over the next couple of sessions. The Qs, boring, in the middle, nothing much to go off. I know you want NASDAQ, NASDAQ kind of work here, but I don't really like looking at the NASDAQ. I think the S&P 500 gives us a lot. So let's have a look here at the daily first. Daily was not able to close below the 20 moving average. Super bullish for retail traders and for everybody else because it can't get underneath here yet. Now, if it does, well, it's a different story. The bears are in control. But that was one of the big signs. But the big thing here was the 15-minute chart in the previous session. Notice how the reaction was. See this volume? Instant. Oh, it's terrible. Sells off pretty hard. Comes underneath. That's what we actually spoke about in the previous session as one of the opportunities that may have happened. Then the markets rallied up and they took out our high here, 44.69. At that point, you got a giant wick on a lot of time frames, and that wick holds orders. There's some nasty Wall Street individuals probably buying the absolute rubbish out of that. Then we fade early, which of course gets the sellers in, then trapped them out, and of course we saw rallies back up into these highs. Now, that's not to say there's not a bear here. 4,500, of course, still presents a gap fill, and on top of that, where the bears kind of hold their last stand. But if this market does manage to get through, of course, the key level of 45.40, which we've talked about quite a few times, it looks like we could be going to a new high. And that's just the reality. So there's a lot at stake here into the retail sales. There's a lot at stake through all of this liquidity. We know there's shorters that sit through this zone. Why? Because they've done it before. We know there's some kind of build here. So even like stop losses may not even be safe there. It could easily do this. This is a scenario I'm playing with. It's very interesting time. But unfortunately, we don't have that much structure at the time of this recording to really get too much information. I mean, maybe 44.74 could be a little bit of a low to look at for a turn, but we're coming into that supply structure. So I think a lot of people that were entered into bull positions yesterday, congrats if you did, would be starting to think about taking some profit or scaling back. We spoke about Bitcoin. We talked about the pullback into the long. At this stage, that is holding. This is the level of demand. So that's pretty much where I think some people would have looked at longs. We talked about that structure. In this case, this is a weird candle for sure. But if we're managing to close above that, so we'll set alerts, then we're probably moving even higher for something like Bitcoin. So we're going to set alerts here for this. And I don't know if it'll be sustained, but certainly that's the kind of price action I would usually look for in replicatable strategies. Let's now move over to the big thing here, which is, of course, trillions of dollars of options expiration. Where do we sit? 440 still. 440 is still the put wall. 450 is still the call wall. And the market can very easily stay between these two barriers this week, with then a lot more opening down and upside potential over the post-OPEX week. So it's being trapped actually within this range, and it's still giving quite a lot of liquidity and movements. You can see here 3 million open interest orders. Now let's move over to the next thing, which is, of course, in this case, core PPI and retail sales. All eyes will be on how weak is the American consumer. Are we seeing a slowdown into what's traditionally, of course, a great time of year, which is Christmas and Black Friday and all the big sales? So everyone will be looking at that. And then prelim UOM consumer sentiment and Empire State Manufacturing Index on Friday. So still a lot of news coming out for the rest of the week. Just a reminder, if you're interested in attending our Vegas conference, it's coming up in literally pretty much a week and a bit now. We will be doing our send out for people that have won in the competition. So we obviously have a little competition there. And if you want to buy the virtual attendance, we've got a new live stream as well. Links in the description. Just jump over to fxevolution.com if you're interested. We've got over 11 world-class trading experts. We've got an ex-Goldman options trader. We've got a whole bunch of experts in their field, which is going to be awesome. And of course, I'll also be doing a pretty good talk, I believe, that's pretty awesome, about something that we haven't ever spoken about on the channel or even in any of our courses. So some new release stuff, content there. It's going to be awesome. Make sure to check it out. You get a copy of the 2022 conference as well, which has some really relevant data still to today. And yeah, I hope to see you there. Thanks so much for watching. Subscribe, smash that like button. We'll see you in the next one. Bye for now.